In June of 2026, SpaceX will list on the NASDAQ exchange. The target valuation for this initial public offering sits right around $2 trillion. To put that number in perspective, the current record holder for the largest public offering in human history is the 2019 Saudi Aramco IPO, which raised roughly $30 billion. SpaceX is aiming to pull in $75 billion. This creates an immediate paradox. SpaceX currently dominates the aerospace industry, handling nearly 90% of all global rocket launches. They have the market entirely cornered. The obvious question is why a company with a near monopoly urgently needs an influx of $75 billion in cash. SpaceX is currently burning through more than $1 billion every single month. These massive expenditures are driven largely by the capital requirements of Elon Musk's separate artificial intelligence venture, xAI. The balance sheet suggests this IPO is less about Mars and more about securing the capital needed to win an increasingly expensive artificial intelligence war. Down here on Earth, the artificial intelligence boom has a massive fatal flaw: its insatiable, unsustainable energy appetite. Running AI models requires massive data centers, and those packed servers generate immense heat. Right now, a standard terrestrial data center wastes 25% of its total electricity on air conditioning just to stop the hardware from melting. That extreme power draw is triggering severe political backlash. Across the United States, dozens of local and state governments are looking at their strained power grids and passing legislation to explicitly ban or heavily restrict new data center construction. Between aging infrastructure that cannot supply enough electricity and local zoning boards denying building permits, the industry is hitting a physical ceiling. Because AI is rapidly exhausting its supply of usable real estate, local water sources for cooling, and municipal goodwill, the only direction left for the infrastructure to expand is up. This is exactly how SpaceX plans to spend its $75 billion. Musk's core architectural pitch is to launch millions of computers into the sky, creating what he calls orbital data centers. The first major advantage to hosting AI in space is unlimited power generation. By placing these satellites into a sun-synchronous orbit, a specific path that continuously faces the sun, they collect energy 24 hours a day. This chart proves the efficiency gain. Without atmospheric absorption, orbital solar energy is 30. Operating in low Earth orbit completely removes local zoning boards, state energy commissions, and municipal governments from the equation. There are no building permits to fight over in space. SpaceX estimates its total addressable market at $28.5 trillion, and the company expects over 90% of that value to come directly from these orbital servers. By moving hardware off-planet, they effectively nullify the industry's three greatest physical liabilities. Of course, the physics of orbital data centers only matter if the economics make sense, and the math only works if a company can afford to lift thousands of tons of heavy computer hardware into the sky. To bypass that logistical bottleneck, SpaceX relies on the Starship mega rocket. This massive, fully reusable launch vehicle is the mechanical asset required to move server farms off the planet. This chart illustrates the financial goal. The top line represents the high historical average cost of space launches. The steep drop represents Starship's target, crushing orbital delivery down to just $185 per kilogram, a 99% reduction in freight costs. Once the delivery gets cheap enough, the manufacturing pipeline takes over. SpaceX already mass produces satellites for its Starlink internet service. The plan is to rapidly build these new orbital servers directly onto that exact same already perfected Starlink chassis. Starship provides the affordable lift capacity, and the Starlink lines provide the proven hardware chassis. Together, they turn orbital computing into a repeatable, high-volume industrial process. But before those servers reach orbit, the company has to survive its own IPO, and the June offering is specifically engineered to lure in everyday retail investors. The IPO paperwork outlines a 5-for-1 stock split. By artificially dividing the shares, the per-share price drops significantly. This makes it far easier for Elon Musk's massive individual fan base to buy in, maximizing participation from people trading on their phones. Even if you don't buy the stock directly, you will likely end up holding it. Within 2 weeks of listing, SpaceX will be included in major NASDAQ indices. That triggers an automatic mandatory wave of purchasing from millions of everyday pension accounts and passive tracker funds. That sudden influx of retail money creates extreme volatility. Early venture capitalists, the private investors who funded SpaceX over the last 2 decades, will use this incoming wave of cash as their opportunity to rapidly dump their shares and realize their profits. The mechanical structure of this IPO means that everyday investors, whether they actively buy the stock or hold it passively in a retirement fund, provide the essential exit liquidity required to fund the initial stages of this $75 billion experiment. Hovering over that $2 trillion valuation is a singular, unquantifiable liability. Due to the way the company's shares are structured, its CEO is entirely unfireable, making him a central point of failure for the whole corporate structure. And in the AI sector, he is currently vulnerable. Just recently, Musk lost a high-profile breach of contract lawsuit against rival tech firm OpenAI, highlighting the intense, well-funded competition dominating the terrestrial AI space. Then there are the extreme political liabilities. Musk's polarizing involvement in Donald Trump's Department of Government Efficiency ties the company's fortunes directly to a single, highly volatile political era. These controversies are genuine, systemic risks. SpaceX relies heavily on government contracts and regulatory approvals. Aligning the brand so aggressively with one political faction severely threatens the company's long-term stability and its ability to secure approvals from any future Democratic administration. This is the reality of rocket fuel capitalism. The retail investors buying in this June will bear the financial and political risks of backing a deeply flawed management structure. But if the engineering holds, humanity as a whole stands to inherit the technological fruits of this orbital AI frontier.